Now we are going to see the compliance part in peer review in accounting standard for practice unit as part number 3. So far we have covered part 1 and part 2. We are going to cover part 3, and this is very important thing. Again, I want to start with that this technical, professional and ethical standard complaints have been divided into 4 parts. One is accounting standard, standards issued by ICA, framework issued by ICA, and applicable provisions of various statutes and our regulations. And straight away we are going to AS 19, which says that leases. So in leases, that is the usage right is only transferred. The ownership lies with the person. That is who is the real owner. But in HP, the ownership transfers the person who is buying the. Here, the ownership is retained. So the owner is entitled to claim the depreciation, and this that is a lease agreement. You have to see whether it's a lease agreement, is a registered one or not. Then you have to see what is the period of lease, what is the terms and conditions of lease, what is the amount of lease, and other terms and conditions that is mentioned the lease deed that you have to read. So as the practice unit verify the lease agreement, which transfers the right to the client to use the assets only. It is not the ownership. So to use the rights and ensure that the real owner claims the depreciation, because in the lease only the right to use is transferred and not the asset ownership. So whether lease income and expenses from operating lease recognized in the profit and loss account on straight line basis over the lease term. So you can say that all the lease income on the all lease expenses have been incorporated, have been entered in the profit and loss account. That's a very important thing that you have to see. And whether the disclosure requirement under this standard has been considered by practicing. So disclosure requirement, that is also under duty of the practicing unit to consider whether the lease details have been entered correctly as per AS 19. Then earning per share. So earning per share, what is per share value, per share earning, that you have to do it. So here, whether the practice unit has applied due care in verifying the weighted average number of shares for determining the EPS, that is earning per share. So what is the total income? What is the total share? What is the total number of shares that are eligible to calculate the EPS? That practicing unit has to verify. And whether the basic and diluted EPS has been presented on the statement of the profit and loss account and figures are appropriate. That is based on the profit that is available, and you have to calculate the EPS. Next one is, in case of dilutive EPS, whether adjustments to the net profits have been properly considered. So you have to adjust what are the adjustments that you have to do it to arrive at the EPS, whether everything is being considered. That is whether we can add the depreciation or not. Other even we can say that whether non-cash items have been added or not, that you have to see. And now we are moving to AS 21, that is with reference to consolidated financial statements. So what are the financial statements? P&L account, balance sheet, receipts and payments, cash flow statement, where everything is part of the financial statement. And the consolidated financial statement, that is head of holding company is there, subsidiary company is there, associate company is there. We have to consolidate everything and you have to give the report. That is the thing that they want to say in AS 21. As a practicing unit, obtain the list of associates, subsidiary, joint venture from the client. So the practice unit has to obtain all the details of there is this. So who are all the associates, who are all the subsidiary concerns, who are all the joint venture clients, everything that the practice unit has to. Then whether the practice unit has considered the consolidated financial statement in case of the client has either associate, subsidiary, joint venture. That means suppose there is an associate concern and there is no subsidiary and joint venture. So when they prepare the consolidated financial statements, the details have to be The reasons for non-consolidating either associate subsidiaries or have been disclosed in the consolidated financial. So the point number 2 says us you have to obtain the details of the associate. In case if you are not able to, if you are not doing the consolidated financial statements of associate, subsidiary, and joint venture, then you have to give the reason why you are not considered. Whether the pre and post incorporation profits have been calculated considering all the very simple. So before incorporation, then after incorporation, what is the profits? Whether you are considered the same thing in the financial statements that you have to report. Adjustment for minor interest has been given correctly because at the time of consolidation, then the main shareholders minorities are there, so minority interests have been considered in the consolidated financial statement that the practice unit has to verify. As the intergroup holding adjustments and elimination of intergroup unrealized profits been appropriately considered. That means you have to eliminate the unrealized interest in among the intergroup holding. Whether the disclosure requirements have been complied accordingly. So that means all the disclosures in the consolidated statement should be as per the AS21. It is nothing but you have to consider the associate, subsidiary, and joint venture units along with the main unit, and whether you have to consider or not. If you are considering it, it is okay. If it is not, if you are not considering it, then you have to give the reasons. And now we are moving to AS22, accounting for taxes on income. So what are the taxes that you know? If that's you can pay advance tax, TDS, you can pay self-assessment tax, and all other taxes. So whether practicing unit has ascertained the timing difference and permanent difference. So when you have to find the difference, you have to consider in the calculation of taxes. The practice unit verify the deferred tax calculation provided by the client. What is deferred payment? That is advance tax. So this tax has been calculated, has been adjusted only in the next year or in the next period. So the practice unit has to verify at the time of calculation. The unit has to verify the deferred tax calculation. Even deferred tax assets also. Sometimes this has to be adjusted. This the asset has to come only in the next year and not this year. That also can be verified by the practicing unit. Then whether the entity has a legally enforceable right to set off the assets against the liabilities representing current tax. Suppose even in the last year also the taxes have been deferred, and this year, and whether they can adjust it. And only the proper person, only the legally enforceable person can adjust the set off. That is duty of the practicing unit. Whether the set off against the current tax has been adjusted correctly or not. Whether the presentation disclosure as provided by the standard been complied. See, in almost all everything in the AS22 and AS2, 3, 4, everything that you have to follow. That is practicing unit to follow. Whether the standards set by the accounting standards have been followed by the that they have to give it specifically. Now we are moving to the accounting for investments in associates. So there is a possibility that that is holding company can invest in this sister concern or associate concern. So first thing you have to get the list. The list of associates signed by the client being obtained by the practice. So anywhere, anything, if it is an associate concern, then the practicing unit first they have to get the list of the associate concerns. Whether goodwill or capital reserve being computed on the investment in an associate concern as the difference between cost of acquisition, equity share of the equity of the associate adjustments have been provided accordingly. That is, it is very, very simple. You had when you are calculating the investments in associates, you have to calculate the goodwill and capital reserve. And third one is as the gross share of profit and loss account attributable to the holding company being debited or credited to the holding company's profit and loss account. So this is it's only accounting treatment. So what is the share of profit attributable to that is available to the holding company, whether the same is being given credit. So in associate concern, there is a profit, whether this profit is being given credit to the holding company, that also the practicing unit has to see. Whether disclosure requirement have been complied. This is a simple. Almost you can see in all AS you can see whether the disclosure requirements have been compiled accordingly. And discontinuing operations. Sometimes some unit may discontinue the business, discontinue one of the activities. What are the things that you have to consider? That is being covered in AS 24. The practice unit has obtained the list of major line of business. The first thing is you have to obtain the list of business and which are the business or operations have been discontinued. It has to be duly signed by the client. Then it has to be handed over to the practice unit. The practicing unit has measured the changes in the assets, liabilities, revenues, and expenses relating to the discontinued operation as set in other accounting standards. Third one is whether prior period figures restated to segregate asset, liabilities, revenue, expenses, cash flow of continuing and discontinuing operations as disclosed in the. So, what is the assets, liabilities, revenue, and expenses and cash flow of the discontinued business or continued business that the practice unit has to ascertain and report? Next one is interim financial reporting. Is whether practice unit is obtained the understanding if the client is required to prepare and present interim financial reports by the regulator. Sometimes the SEBI may insist that once in a quarter, once in 6 months, or that is half yearly, or one they have to submit the report. Whether this type of interim financial reporting has been done by the company, whether the same is according to the Companies Act or according to the regulatory authorities' direction. Whether the client has applied the same accounting policies in his interim financial statement as are applied to the last financial. See whether you give the report for interim financial reporting or not, you have to prepare the accounts as it is applicable to the last annual financial statements. So next thing, the future rules are different. So if you are preparing today, what is the rules that are applicable in the last financial statements? Whether you are following the same rules that the practice unit has to see. The presentation and disclosure as required under the standard as it is general. So the presentation and disclosure of the AS to be followed. Next one is intangible assets. So you know what are all intangible assets and whether the recognition criteria have been verified by the practicing unit. Ensure that internally generated goodwill is not considered as a goodwill concept comes only when you sell it, only when you change it, or only when you transfer it, not internally. So the internal goodwill should not be considered. That's a basic concept. Whether the treatment of expenses incurred during research and development phases has been accordingly treated in the books of accounts. So what are the expenditures that you have incurred towards research and development should be properly recorded in the books. In case the expenditure incurred during the development stage has been capitalized, whether all the conditions are demonstrated on every balance sheet date, if any of the conditions is not satisfied, whether the same has been charged to the P&L. So even in the development stage, what are the cost? It is that it has to be the accounting standard treatment is in line with the standard. This is a normal thing that you can see in every accounting standard. Whether the disclosure requirement, life depreciation method have been complied with accordingly. Next one is financial reporting of interest in the joint venture. Now they are moving to the joint ventures. That is whether the practicing unit has obtained the agreement between the two or more parties to undertake an economic activity under the joint control. That is in the joint control. So any joint venture should be entered and the practice unit has to see what is the agreement that you have to go through it, whether the proper care has been taken to prepare the joint ventures, whether proper adjustments with regard to joint ventures have been made in the books of accounts of the client. Because what is the share that you are receiving from the joint venture, that also to be recorded in the books of accounts properly. As usual, whether disclosure requirements have been complied with accordingly. This is AS 27. And now impairment of the assets. Whether the practice unit has obtained any explanation with regard to indication on impairment of an asset as on balance sheet. That is after providing depreciation, whatever it is written off, what is the balance in the asset, whether the same thing is reported properly or not, that you have to see, that is being covered in AS 28 as a determination of not net selling price being verified by the practicing unit, whether there is any reversal of impairment of assets. Suppose if you have made a depreciation due to some other reason, if you are reversing it, whether then why they have reversed it, every reason should be clearly verified by the practicing unit. Whether the accounting treatment of impairment or loss has been verified. So what is the accounting treatment with reference to assets? The practice unit has to verify, and during peer review, this is being given very much important. And whether there is any revaluation of the impaired assets. Suppose in case of revaluation, what is the effect? Whether the same is being recorded in the accounts or not, because the revaluation, it is not the actual profit. Only when you sell it, you will get the real profit, but revaluation will not increase the profit. So the accounting treatment has to be verified by the practicing unit. Now we are moving to AS 29 with reference to provisions, contingent liabilities, and contingent assets. Whether the conditions of creating provisions being tested by practicing unit. So here, whether the provision made by the company, is being correctly entered, whether the provision is actually required, whether the provision calculation is done correctly, that has to be seen, tested by the practice unit. Whether PU has verified if any liability has been disclosed as a provision. So provision is different, but liability should not be treated as a provision. This is a difference between a provision and a liability. So the liability should not be treated as provision. So if that is being there, then the practicing unit has to consider that point and make a statement, make a declaration, or make a disclaimer in its report. Whether the same is being done by the practicing unit or not, that has to be verified. Whether proper disclosures or contingent liability have been made in this. So it's very difficult to get the contingent liability until it has been told by the company. It is very difficult to get the contingent liability position. But anyhow, if it has been disclosed, to the practice unit, and the same thing has to be recorded properly in the financial statements also. So this has to be verified by the practice unit. So what are the contingent liability? Whether the contingent liability is a genuine one or not, whether there is any chance to win the case or not, everything has to be seen by the practice unit. Whether practice unit has checked that the contingent asset or not. Whether there is any contingent, has to check the contingent asset. What are the contingent asset? Whether it's actually a contingent asset or not, that has to be seen by the practice unit. And it's being recognized in financial statement unless the realization of income is virtually certain. So contingent asset, contingent liability, or provisions, only when it is realized, the same has to be treated as income. Otherwise, it should not be treated. It's a basic concept. So when we are giving anything in the financial statements, only the actual receipt has to be returned and not the contingent portion. Now, this is what I want to say about the there is a compliance part on the part of the accounting standard. And this portion I have concluded, and we have covered AS 1 to AS 29 in 3 parts. So I request everyone to go through the entire portion, and any doubt, please refer our ICI peer review manual. From there, you will get it. And the explanation given by me is only from my angle. For any decision, you have to follow our insurance. With this, I am signing off from the today's presentation. And thank you very much for patient hearing of this peer review with the compliance portion with reference to AS. Nandri, Vanakkam.